He grossed $125,000 in revenue for the year. This guy's a sole proprietor. He doesn't necessarily. Well, let's take lawyers for instance. Probably a lot of you are self-employed. Do any of your clients actually send you a 1099 saying I paid you $10,000 to represent me in my divorce? No. All right. Nobody ever gets. I say nobody. If this guy has like one, well, he's an LLC actually. So actually, what happens here is that comes through on a K-1 form to him, or what's similar to a K-1. But if this were not an LLC, let's say it was a sole practitioner or a sole proprietor, the odds are he will not have 1099 forms that add up to $125,000, unless maybe he's got like one customer or two customers and they both send him a big 1099 and they're both on there and that's all his revenue. But odds are for sole proprietors or even sole member LLCs, odds are they're not going to count cash. Is anyone's client ever opposing spouse ever claimed that their husband wasn't counting all the cash coming into the business? Never got that, huh? Yeah. Okay. Yeah, I've never heard it either. So that's a tough one. Finding cash is difficult. I'm sorry, I'm screwing up the pages here. There are ways of doing it, but it's costly to find that. But if you think the guy should be that number should be $100,000 higher than it is, well then that's worth spending a few $1,000s to have us come in there and try to figure out if he's counting cash or not, or if he's not depositing all of his revenue. Let's put it that way. Then just the basic construction of this is here are your expenses right here in these sections, lines 8 through 27. So and I'm going to try to tell you the basic construction of how this works. That's kind of the point of this. Is so all of the expenses, lines 8 through 27, add up to to $66,065. That is line 28. So line 7, which is revenue, minus line 28 is $58,935. That's how much revenue, or rather, that's how much net profit this sole proprietorship is reporting. Now, here's one pointer for you. You look up here, deductible meals and entertainment, line 24B. Meals and entertainment are only 50% deductible. So, let's say you're the husband's attorney, and you don't have a forensic accountant, but you're doing this on your own. That's fine. And you're the husband's attorney, and you say, well, you've only claimed $4,250 in meals and entertainment, but you actually spent $8,500. So you could take this number right. Does that make sense? He's only deducting 50% of it. So his actual out-of-pocket, assuming it's all legitimate expense, his actual out-of-pocket was $8,500 for that number. So he's got about $54,000 of net profit. And that, as long as all these expenses are legitimate, then that's an add-on. That's something that maybe you can show how brilliant and how you are with tax returns to bring that up. A couple of places that you could hide expenses or park expenses, if you will. Car and truck expenses, everybody always claims that, line 9, but rarely does somebody who's a consultant like this guy is drive 8 or 9, 10,000 miles a year for their business, especially if they just drive to the office and go back home. So maybe if you can, if you're this is the husband, if you're the spouse's or the wife's attorney, if you can chip away at some of these expenses, obviously, then what you've done is you've increased their income. And that's a goal. You want to do that. Obviously, you want as high income as possible. And the husband's attorney wants as low as income as possible. Schedule C has a second page. This is page 2 of the Schedule C. On the back of that, this is where and then your handout, I guess that's page 3. This is where the car deductions are calculated right here, 8,500 business miles, 1,000 commuting miles, and others 10,500 miles. Once again, it's only relevant if it's bogus to you. Here are your other expenses, and here's another construction item of the return. These are the miscellaneous expenses that were right here. See other expenses on line 27, $27,541. Well, this is where that comes from, is the second page here. All right, but notice that this very last line here says, see line 48, other expenses. There's $13,000 of expenses that didn't make it onto the page because it just spilled on off the page. So way on down, if this is a 50-page tax return, way on toward the back somewhere, there's probably a schedule that says Schedule C, line 48, other expenses. So you want to go down there, and this guy may know that. He may know that, and he may put some bogus expenses down there that he knows is going to spill off onto some subschedule an attorney may not look for. And just remember, we actually will come to it in a moment. And then one other. Okay, that's not on here. So, any questions about the Schedule C so far? I know I'm going through it quickly, and just in the interest of time, I don't have a whole lot of time. So, Schedule D, this is where you have capital transactions here. Once again, it's another construction item. Page 1 of D only has enough room for 5 different transactions. So there's 5 different stock sales here. And then you see line 9 here, and we're looking at page 3 of the handout. On line 9 it says, enter information from Schedule D1. So there are other transactions on a D1, which is what we call a continuation schedule. And so there's $261,000 of sales on D1, which netted out a $25,000 profit. And so we'll look at D1. That's the next page. And here are those. Here are those other. Yeah, and this is the next page or two in your handout. It's going to be page 4 on the right. See, here's some other transactions here. There's your $261, and there's your $25,000 of profit. Now, here's the Schedule E I told you that was a catch-all. Schedule E is also a 2-page schedule. It's very important that you know that because what happens on page 1 and page 2 are very different. Page 1, this is where you're going to have generally rental properties. All right? And in your handout, we are on page 5. This is a rental property. Think about this is probably none of this revenue. Very little of it's probably going to get reported to the IRS through a 1099. The tenant would have to actually mail this person a 1099 and mail one to the IRS. Doesn't happen very often. So once again, there could be an issue for cash not being deposited or collected. An interesting item on here, legal and other professional fees. You know, if I'm a lawyer, I'd look at that and say, God, that seems like a lot of legal fees or professional fees for this building. I wonder if he's paying for his divorce lawyer through and trying to deduct it on here. Yeah, probably so. And then not a whole lot of other things of interest on here. This particular property has a $13,000 loss built into it, but that loss also includes depreciation, which is line 20 of $32,500. Maybe that legal expenses are bogus of $10,000. So depreciation is not a cash money expense. It is not an out-of-pocket. And I know that I guess it's still this way, but in the child support guidelines, they used to say depreciation was not an expense that you can deduct in order to arrive at your income for child support purposes. I think, does it still say that? Okay. So, I mean, that's, you're the advocate, you're the wife's attorney. You say, well, look, I think this $10,000 right here is bogus. I'm going to add back the $32,000 of depreciation. So all of a sudden, my $13,000 loss becomes a, $40,000 profit or $30,000 profit that you can then use. And this brings up an interesting point. There's a recent case, Church versus Church, a couple of months ago, and some of you that are on my emailing list got an email where I was discussing this case. And in that case, the husband was arguing that actually this was an alimony modification case. So he'd already been divorced, and he was coming in with a change of circumstances. His W-2 income had gone way down, and he was, he'd made some bad investments, and he just couldn't afford it anymore. But bottom line, the trial judge said that, well, yeah, your W-2 has gone down, but your rental income is still coming in, and so I'm going to count that rental income, add that to the W-2 income that you do have now, and yeah, you got to change the circumstances, but it's not enough. You're still going to pay that alimony. I'm not going to reduce the alimony. So on appeal, what Church said was that Number one, that rental income was not included in the very first divorce trial when I first got divorced, and the rental income was not included in my ability to pay alimony. So you can't use it now at the second trial. And he also said that this was the rental property was an income-producing asset distributed to me at the at date of divorce. Therefore, you cannot use it now as a stream of income for support purposes. There were two different questions sent up, and the appellate court said no, that's not. What the trial court eventually said that just because they didn't consider it in the first trial doesn't mean I can't consider it now in this modification trial. And I can use all incomes from any source according to the actual statute. I didn't realize the statute said that about alimony, but apparently it does. All income from any source, and the appellate court agreed that you can use this. Number one, simply because we didn't use it in the first trial, I can use it now because it is a source of income. And secondly, just because it was an income-producing asset awarded to you at divorce doesn't mean that I can't use the income from it now for alimony. And it basically said it was not a double dip. You always get that. I get that question all the time on the cross-examination. Well, if I give them this asset, how can you use it for, well, you can, and now this case tells us that we can do that. That's the way I interpret it. So church versus church, if you read it or have read it, I'd be interested to hear your opinion on it. I think it's a pretty important case. So that's Schedule E, page 1. Now here's page 2. This is where you get this is the repository for all of your partnerships and S corporation and LLC K1s that you get. And I get a lot of questions about K1s on my website, or rather a lot of hits from people looking for K1 information. They want to know about K1s. They want to know about guaranteed payments. They want to know about S corporation dividends. So this obviously these are things you want to know too. This is where, in this particular case, XYZ Services LLC, and it's kind of hard to see the construction of it. You got line A, B, C, D, and E. Here you have lines A, B, C, D, and E. So the actual income or loss is down in the second section down here. And in your handout, once again, we're on page 5. So in this particular case, XYZ Services has a $147,000 profit. Bank Shares of Eastern Kansas, which we heard earlier, has a $4,500 profit that he's got to put on here. So he's got $151,700 in taxable income from these two entities. That's on the Schedule E. All right. Well, remember on page 1 we had a $13,000 loss, and we got a $151,000 profit here. Net the two out. That's about 130-something thousand of income. But if you remember from page 1 of the 1040, we had $170,000 of income coming from Schedule E. So there's something else on here, another source of income or another asset. Oops, I'm sorry. And if you'll look down on line 40, you're on page 5 again. On line 40, it looks like he's got rental income from a farm. All right. Now, once again, that's a major asset. You're probably going to know about that. It's an income-producing asset, but can you use the income from it for support purposes? Apparently so. So what you have here on this Schedule E, you had 4 different items being reported on here. You had a rental property with a $13,000 loss on page 1. You had an LLC with $147,000 profit. You had an S corporation with a $4,500 profit, and then you had a farm rental income of $33,000 here. So all 4 of those items total up to $171,531. And if you go back and look at the front page of your 1040, you'll see that on line 17. That's where line 17 comes from, or all these items on this. So it's a very complicated form, but you need to know what you're looking at. Any questions about E so far?
Here's a quick question.
Yes, sir.
What are you looking at realistically when you go with value or income from K1 aspect? Because I know I've got 3 or 4 things I'm looking at businesses, I'm not sure. And a lot of times, that's real money is not, you're not getting that as income.
Interesting that you should bring that up, because I happen to have a K1 here to show you. Yes.